Signals feel good because they remove responsibility. Buy here, sell there, easy. And for a moment, it feels simple. But today, I'm not giving opinions. I'm using facts, real data from real traders, and real reasons why signal-style trading breaks down over time. And most importantly, what works instead? A system that helps you stay in control. Here's why signals are so addictive. First, speed. You don't analyze, you just react. Second, like certainty. The signal sounds confident. It feels confident. Third, social proof. A channel shows wins but rarely shows full statistics. And this is important. Trading isn't about being right once, it's about surviving. Surviving thousands of decisions. And signals usually don't come with the one thing that determines your long-term outcome: a consistent risk framework. Let's talk about the boring part. The part nobody likes to discuss: costs. Signals typically push frequency. More trades means more spread, more fees, more slippage, more bad fills. And regulators have been warning traders for years. The CFTC explicitly states, no trading system can guarantee profits, and frequent trading signals can lead to substantial commissions. Even if a signal is correct, cost can turn it negative. Being right is not enough. The math still has to work. Now the bigger issue: survival. People underestimate how hard it is to be consistently profitable. Not for a week, but for years. There's a large-scale study on day traders in Taiwan. It found that less than 1% were able to reliably earn positive returns, net of fees. Another study, some in the Brazilian equity futures market, found that 97% of persistent day traders lost money. 97%. Only 0.4% earned more than about $54 a day. And even the top trader, around $300 per day, with extremely high variability. Why does this matter for crypto? Because the mechanism is the same. Overtrading, costs, emotional decisions, inconsistent risk, especially when you outsource your thinking. So what works better than signals? A system. A good system doesn't say, buy now. It says, what's the higher time frame bias? What scenario is most likely? Where is the invalidation level? What's your risk per trade? And when should you do nothing? That's the real edge, not predictions. Structure, not hype. Probability. And here's the key point. A real system doesn't replace the trader. It guides decisions, you stay in control. Signals feel good because they outsource control. But long-term trading requires the opposite: building control. Stop looking for the perfect signal. Start building a process. Risk, scenarios, consistency,